Wednesday, November 25th, 2020, Monaco 64, home of alternative economics and contrarian views. So yeah, the Dow closed above $30,000 for the first time ever yesterday. President Trump was very happy about it. But I would say there's a lot more going on than just the Dow going to 30,000. We're seeing the dollar really starting to lose a lot of value. Just beginning, actually. I noticed commodities are starting to make a move, not just gold and silver. And you might say, well, gold and silver have come off the last few days. They have, but they're still up substantially year to date. But the general commodities like base metals or industrial metals, the soft commodities, agricultural commodities, energy, they are all starting to move up. And we're going to look at that today and to see how that's going to make it even harder for those millions of people around the world and in the US, in the UK included, who are really having a tough time in 2020 because of government activity, governments shutting down, locking down economies, a hysteria, right? Stopping people from going to work, stopping people from living normally. And yes, the stock market is doing great on the back of, I think it's 14 trillion that's been injected into the system by the central banks since March. There's an article on Zero Hedge talking about that. So yeah, the 90%, the bottom 90%, of course, have very little investments in the stock market and those things. It's more the top 10% that's doing really well. Yes, the Fed and the powers that be always argued that there's a trickle down, but we haven't really seen much trickle down. I've spoken about how inequality has grown in the last 30 years, and I've used, of course, Fed data to show you that. But today we're going to focus on commodities, and then I'm going to reference this book here to talk about the dollar and commodities and what being long gold really means. Not just in a way to protect yourself financially. So to look at the markets and commodities, I wanted to show you commodities. Let's start out with oil, WTI crude. So here's the chart of WTI crude. That's starting to move up. As you see, we've broken the high from this summer. We're at 45.31. Let's look at gasoline. So gasoline, or gas as Americans would call it, that's starting to move up. Heating oil. Well, look at heating oil. I know the time of the year warrants that to go up, but it's picking up. Look at heating oil in the last few weeks. It's just going through the roof. Let's look at high-grade copper. Well, we've noticed we've been following copper for quite a while. It is bouncing back up, and it's aside from breaking this summer's high, it's already here breaking out above the high from 2018. That's high-grade copper. Let's look at zinc. Zinc doing the same kind of move as copper here. It's blown right through the high from this summer. Aluminium, or aluminum as Americans would call it, moving up. Nickel, same thing. Lead. Some people, of course, try to turn lead into gold. Iron ore, looking pretty good too. So now the soft commodities. And why is it so important to look at commodities? Well, because all commodities are priced in US dollars, because the dollar is still the major currency in the world, major reserve currency, if you want to call it. So if commodities are going up, it means that the dollar is going down. So there you go. In the 70s, when the dollar was on its knees, when the US Treasury had to borrow in foreign currency, commodities were moving through the roof. So let's look at coffee. New York coffee, yeah, weekly chart. It's quite a choppy contract. So it is moving up, but it's been all over the place, of course. What about wheat? Well, looking quite bullish. It looks a little bit like the base that silver has formed in the last few years. So it looks like it's breaking out from the high around $6 or 600 cents. Corn, same thing. Soybeans. Wow, look at soybeans. What about sugar? Sugar as well. Lumber. Well, lumber has been a special case, I guess. It's been very bullish earlier on this year. It kind of collapsed and it looks like it's bouncing back. Let's have a look at soybean meal. Well, up as well. And there's been talk about cocoa, right? Let's look at cocoa. Yeah, cocoa has spiked. It still has room to spike higher. So you get the idea. Commodities are starting to move. It's not just gold and silver. And a good index to follow is the Bloomberg Commodity Index. And here as well, if you look in the last 6 months, we're breaking out. We're almost at 75. That was from yesterday, I guess. If you look at a longer term chart, 1 year chart, we still have quite a bit of room on the upside. But the important thing here is that these commodities are starting to break out. And you can bet speculators, investors are going to be looking at that. A lot of momentum traders. So that's the flip side of the dollar. So why have gold and silver been under so much pressure the last couple of days? I would say it's more to do with the trading on COMEX. Yesterday we had the expiry of options, the December options on COMEX. And I think a lot of the people who write these options, they wrote a lot of calls because the small speculators, small investors always like to go long. A lot of times they bought calls. So by bringing the market down on expiry, they make these options become worthless because they sold them, for example, for $5. And with gold at 1880 or 1900, they would have lost a lot of money on the calls, 1800 calls or 1850 calls that day, or even the 1900 calls if they hadn't try to get gold to go down. Gold could have gone up above 1900, especially with what the dollar index is doing right now. The dollar index is just above 92. And as you can see here, the recent low this year was 91.74. So we're right near the lows, and the technical picture for the dollar index is not looking great. So I think these traders, whoever they work for, could be bullion banks, could be hedge funds, they're just trying to extricate themselves from these short positions. And that's why they hammered gold. But I think, I'm not saying gold and silver are going to go straight back up, but I think the worst is over in terms of correction for gold and silver, especially with what's going on in commodities right now. So where are we this morning in terms of gold and silver? Well, gold right now is at 18.10. It's up about $3. The high has been 18.15. Low has been 18.01. Yesterday, the low was 1800. So looks like that level is holding for now. Silver is up 12 cents at 23.38. The Dow is down 15 points at 30,032. That's the future, of course. S&P future is unchanged. NASDAQ future is up 0.2%. The dollar is kind of stabilized at the moment. It's holding that 92 level. The key level on the dollar index is 91.74. Keep an eye also on the euro because it's a big part of the dollar index. If the euro goes up quite a bit, you know the dollar index is not doing well. Sterling is down slightly. We're at 133.50. The euro is above 119 at 119.10, up about 0.15%. So what about crude oil? As I said earlier, crude oil doing well. It's up 1%. We're at 45.40. So to finish off the markets, bond market 10-year yield is unchanged. It's at 0.88. Yesterday, I didn't make my usual morning video. while it was a morning video for me, I did an interview with a very interesting guy called Rafi Farber. He runs the Endgame Investor service. He publishes his articles that are open to the public on Seeking Alpha. And we spoke a lot about what's happening in the markets, in precious metals, with the dollar and the stock market. And I highly recommend you watch that interview from yesterday. It's not a very long interview. It's about 35 minutes or so. And now then, let's look at what Jim Sinclair and Peter Carlin say about gold, the dollar, and what it means to have gold. And some of you have asked me, why do you focus on Jim Sinclair? What credibility does he have? So before I start, just go quickly through his biography here. In the back of the book, it says Jim Sinclair is primarily a precious metal specialist and a commodities and foreign currency trader. He founded the Sinclair Group of Companies 1977, which offered full brokerage services in stocks, bonds, and other investments vehicles. The companies, which operated branches in New York, Kansas City, Toronto, Chicago, London, and Geneva, were sold in 1983. From 1981 to 1984, Mr. Sinclair served as a precious metals advisor to Hunt Oil, the Hunt brothers, and the Hunt family for the liquidation of their silver position as a prerequisite for the $1 billion loan arranged by the chairman of the Federal Reserve, Paul Volcker. He was also a general partner and member of the executive committee of 2 New York Stock Exchange firms and president of Sinclair Global Clearing Corporation, commodity clearing firm, and global arbitrage derivative dealer in metals and currencies. In April 2002, shareholders of Tanzanian Royalty Exploration approved the acquisition of Tanzanian American International, a company controlled by the Sinclair family, for shares in 10 Range. Following this transaction, Mr. Sinclair became chairman of 10 Range and now leads its effort to become a gold royalty company. So that's Tanzanian Gold now, the company, and he's still chairman. He has authored numerous magazine articles and 3 books dealing with a variety of investment subjects, including precious metals, trading strategies, and geopolitical events, and their relationship to world economics and the markets. He's a frequent and enormously popular speaker at gold investment conferences, and his commentary on gold and other financial issues garners extensive media coverage at home and abroad. And this is the part where I come in, because I've been following his website since then. In January 2003, Mr. Sinclair launched Jim Sinclair's Mindset, which now hosts his gold commentary and is intended as a free service to the gold community. So there you go. That's his background for those who have been asking me. So let's go to page 132 of his pocketbook of gold. Preparation is the key to survival. And this is a comment that they put here from JP Morgan Research. We believe it is reasonable to assume the risk of significantly higher inflation in 1 or 2 years. With respect to golden portfolio protection, remember the time to purchase insurance is before your house catches fire. So with commodities moving up like that and the dollar moving lower, I think we're going to start seeing price inflation or rising prices of things that everyone needs every day in the grocery store or whatever else. All the necessities, things that people don't need, expensive things like Tesla cars or things that are discretionary, they might be going down in price, but the real necessities are going to start to be going up in price. And that, of course, will be recognized as inflation, because if you've been listening to me for a while, you know that inflation is really the increase in the supply of money and credit. So let's get to the interesting part here. So it says to own gold is to be short currency. Yeah, and that's not just the dollar, it's any other fiat currency. To own gold is to vote with your feet where government is concerned. Let me ask you a question. Are all of you really happy with the way your government is running things in terms of the fiscal situation, in terms of all the management of crises? I'm not, and I've probably never been because I never really trusted them. And governments might look like they're looking after our interests, but I think it couldn't be further from the truth, personally. People need to anticipate inflation and invest accordingly. If you wait until it is tangible and in sight, it will be too late. So there you go. It's starting to show up, and it does through the commodities. Gold's asset base is small. Currently, less than 1% of global assets under management are held in the form of gold, and much of that is in paper. Japan and China together may control 40% of global foreign exchange reserves, but only 2% of them are in gold. So this book was written 10 years ago, I have to admit, but I don't think the numbers have changed that much, especially for assets under management. I think it's still less than 1%. So, and here's the interesting part about the dollar. This is what these two guys think about the dollar index. Alongside of this, the downward pressure on the dollar continues unabated. Inflation in the American economy is evident in a lower dollar, as inflation is a currency phenomenon. Inflation in the global currency is now evident as gold rises against every currency, and that has happened since 2010. If the US dollar holds 72 on the dollar index, then there will be no hyperinflation, only standard inflation. So right now we're around 92. We're still quite far away from that 72, but it doesn't look very good, the technical picture. And he says if the US dollar breaks 0.62 or 62 on the dollar index, there will be some hyperinflation. If the US dollar trades below 52, there will be the hyperinflation of the century. So you could argue, well, if the dollar index is breaking 52, why not buy the euro? Well, because gold is going to go up faster than the euro will go up against the dollar. So every currency will be hyperinflated. And there you go. I think we're starting to see the beginnings of the move into commodities and the move out of the dollar. Yes, and it's been hard the last couple of days to see what gold and silver did, the paper price. But the analogy I would give is that, let's say, you know this Titanic is going to sink, and you've gotten on your lifeboat with your family, and it still looks okay though. And but some people on the Titanic have found out that it's going to sink, and they haven't been able to get a lifeboat. So they try to entice you back onto that the Titanic and try to grab your lifeboat, or hope that you actually go back and say, well, you can have the lifeboat if you want, if it's not going to sink. That's the analogy. So don't jump off the monetary lifeboat. I think we're very close to the tipping point for the Titanic. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. Make sure you hit that little notification bell as well to be notified of all my new videos. And you can also follow me on Twitter, Parler, and all these other platforms below here. I wish you all a great day. Take care. Bye.